Today's video is a Market Owl tutorial. The focus is going to be last minute changes. As I went through the dashboard, I made a few modifications. Average volume, up-down volume ratio, and simple moving average. I've added adjustable look-back periods to the moving average and the up-down volume ratio, similar to that of the simple moving averages. So now if you want to know if volume is above or below average volume for 50 days, you can enter 50. Or maybe you're interested in 20 days instead of 50. It takes just a second, it calculates, and then you have the new information. Same with the up-down volume ratio. The up-down volume ratio and moving average information is based on a daily time frame, not an intraday time frame. I felt it was important to have some form of meaningful context that referenced prior price action. Knowing what the moving averages are for a daily time frame, as well as the up-down volume ratio, allows you to have some framework of context that you can put the current move in versus larger recent moves. I've consolidated the adjustability. Instead of having it at the leading and the lagging, it covers everything below it for that section. Sections that are similar to each other all follow the same format or structure. The quick market section is a little different. It does not have volume information, and under the sector area, instead of up-down volume ratio, we're using relative strength, and that's relative strength in relation to the benchmark that you've chosen. You can select a quick risk benchmark. Here's QQQ, an intermarket benchmark, SPY, and a sector benchmark, and in this case it's IWM. It shows percent change for the day versus percent change from the open. I like to build in as much flexibility into dashboards and workbooks that I create. That's why I decided to go ahead and include the adjustable average for daily volume, an adjustable look back period for the up-down volume ratio, meaning the up-down volume ratio collectively for the last 5 days, and the daily moving averages. A lot of times stocks will pull back to a key moving average such as the 20, the 50, or the 200, find support there and bounce up. A lot of times stocks that are making trending moves will have a boss moving average. That is not one of the more standard ones. Maybe it's a 13-day average or a 30-day average. You can go ahead and punch that in, and then you can quickly see when that boss moving average has been violated, and it might be time to lock in some gains or sell defensively or tighten your stops. Okay, that about wraps it up. I hope you'll find some of this information useful, and that as you use the Market Owl dashboard, you'll find it to be an incredibly helpful tool for spotting potential opportunities in the market on a daily basis. Thanks for watching, everyone, and good fills. If you found my free educational materials helpful, I encourage you to make a donation to the Children's Therapy Center, an outstanding nonprofit organization that helps children with special needs. You can also give without actually giving by using Amazon Smile. Amazon Smile is run by Amazon.com, and a portion of your purchases will go to the charity of your choice. Simply select Children's Therapy Center, located in Kent, Washington. You can find more about the Children's Therapy Center on my website on the Principles page. You can also find links to CTC on my YouTube channel in the About section, as well as under every video that I produce. Also consider donating if you've had a great year in trading. Be generous, contribute, give back. Lend a hand to those in need. You can find more free educational material on my website. Under the Education tab, you'll find helpful podcasts, YouTubes, chat room information, book suggestions, webinars, presentations, and helpful resource links. There's information on lessons learned and psychology, trades made, a dedicated section to trading growth stocks, market information, helpful tools and discounts on trading services, information on XLQ, an Excel plugin that retrieves real-time and historical financial data, market and stock analysis, and there's an assortment of videos on my YouTube channel. All this information is for educational purposes only, and the goal is to help you build a solid foundation that you can expand upon. Our chat room is popular and a favorite for many growth stock traders. Take the time to build a solid foundation of understanding before you begin trading. Take the time to clearly define your setups, your entry triggers, your sell rules, and most importantly, have a thorough plan for risk management. The first step in that journey is learning. There are no shortcuts to successful trading, so take the time to research and to educate yourself thoroughly.